3, prepare your forgiveness package for SBA approval. So essentially, the process is gonna look like this. We're gonna reach out to you with requests for documentation related to your loan usage, the use of funds. Once you provide that documentation to us, we'll be in contact with the SBA to verify that that documentation will be deemed appropriate. From that point forward, we'll work with the SBA to get a determination on your level of forgiveness. Kevin, do you have anything to add there?
Yeah, I think that's a good overview. And
we'll get in more detail later on in the PowerPoint on what exactly that documentation should look like.
Yeah, exactly. And within this, the good thing for everyone involved is that if people applied for the EIDL loan program before PPP, so the Economic Impact Disaster Loan Program, you probably had a mixed experience with the SBA in terms of their timeline for responding to you, where often I've heard of people who might have reached out in late March and still haven't heard back. The good thing is that DreamSpring will be the organization you're interacting with for forgiveness. So just like we handle the approval and the interactions with the SBA, your interactions will be with a loan officer going forward, which, given the volume we're dealing with, our ability to reach out to clients has been more limited than we typically like. Being transparent, we are trying to process more PPP loans in 2 weeks right now than we currently closed loans all of last year. So volume is high, but come forgiveness time, our hope is to have really good one-on-one technical assistance. You submit your documentation, we handle the process from there, which is nice because you're not going to need to go to the SBA directly. You're not going to need to wait weeks for feedback, which should be very, very helpful to say the least.
Yeah, that's awesome. Thank you so much, Kevin. So the following slides are just going to go over a brief description of a few of the most common questions that we've received here during the last 2 weeks since you have all been funded. These questions and answers are going to be representative of the language associated with the SBA. So I do apologize for any vague, any kind of vague descriptions. We'll be more than happy to address any more nuanced questions at the end of the presentation. One of the reasons that we wanted to input these questions into this presentation was that because these are the most common questions, it might suffice a majority of you in attendance here today. So the first common question we receive is, will my loan be forgiven? We know that the loan is eligible for forgiveness, but the language in the closing documents is often vague or absent of that. Sometimes the SBA will provide their own draft of a loan document alluding to forgiveness, but that can be vague as well. So a lot of clients are still left with the question of, will my loan be forgiven? Is this legit? Is this true? So the answer to that is that the borrower may apply for loan forgiveness of the amount due on this loan in the amount equal to the sum of the following cost incurred by the borrower, which is you guys, during the 8-week period beginning on the date of the first disbursement of this loan. I want to highlight that eight-week period because for a majority of you guys who were the first initial round to be funded, the dates had changed that the SBA was wanting documentation to reflect. Initially, they were saying, and a lot of you had heard, May 1st through June 30th. So I do want to clarify that moving forward, they are asking for your loan funds to be used and documented by the 8-week period beginning on the date of first disbursement of the loan. So when the funds were first dispersed into your account. So the following are a list of eligible uses for forgiveness. Payroll cost. Any payment of interest on a covered mortgage obligation. This does not include any prepayment of or payment of principal on a covered mortgage obligation, any payment on a covered rent obligation, any covered utility payment. Those are the outlined appropriate use of funds. Kevin, would you like to comment on any more of these and any more detail on these?
Yeah, so a little bit of a backstory on all of this. The SBA, I mentioned that there's been fluid guidance from them, that things have been changing, and that I've often described this as they're trying to build a house and they poured half the foundation and then started building half the house, and then somewhere along the way decided that they needed the other portion of the foundation as well. And so forgiveness is an area that they're still working to clearly define. Today, we're going over what we concretely know, what we can be assured of, but we're also recognizing that there are still some outstanding questions. And so within this, there are the kind of general blanket areas that Gerardo is laying out here. Within the specificity, there are times where we have an answer, and there are times where, honestly, we're still waiting on the SBA for guidance. I've been hearing since mid-April that we should see that any day. So I'm still hopeful, but the good thing is that as of now, we actually have a functional understanding of how this works, which is why we're finally able to get this scheduled. In a minute, we're going to break down with a little bit more specificity how all these different eligible expenses play together and how you can figure out what will be forgiven of your loan request. But Gerardo, with that, I'll turn it back over to you for now.
Yeah, no problem. Thank you. All right. So the second most common question we usually get is, how will loan forgiveness be calculated? So Kevin, I'm sure you'll have a lot more to say on this, but the answer to this question in relation to how it stands with the SBA is the amount of loan forgiveness shall be calculated and may be reduced in accordance with the requirements of the Paycheck Protection Program. Not more than 25% of the amount forgiven can be attributed to non-payroll costs. The borrower's request for loan forgiveness must include proof of funds were used to cover approved costs. So proof of funds can mean anything from receipts to any type of invoices. Kevin, do you have any other examples of this? I know the most common question I have are, will bank statements suffice showing the funds were withdrawn from the actual account?
So this is an area that, like I mentioned, the SBA is still working on perfect guidance, and appropriate documentation for forgiveness is actually something they still need to give us more information on. As a result of that, we understand that there are things that are definitely going to work, like payroll processor records, and there are other areas that may work. We've been given the indication that it's possible bank statements will be available, but because we've not seen written guidance with that, I'm going to encourage everyone to just go above and beyond when collecting documentation, because ideally the way this works right now is you've had your funds for a couple weeks now probably, and you've started collecting documentation hopefully, or maybe shortly after this meeting you will. And ideally your documentation is easy enough that come June, Gerardo will reach out to you and say, hey, do you have those receipts and payroll documentation? And you just have a little computer file or something you can send over to him, and that's the last you have to see of it until he reaches back out to you and says, okay, it's all forgiven, or 90% is, or whatever. And so whatever your patterns have been in the past, this might be a good time to evaluate, okay, bank statements might be sufficient. I have a hunch that they won't be, and that's just because of the amount of fraud that the SBA is already talking about within this program. But we'll talk more specifically. If you happen to be a sole proprietor or a single member LLC, or anyone that's filing using a Schedule C tax return, your forgiveness process is actually easier. We mainly just are going to need your Schedule C return. For other employers, I would encourage you just to try and find a way of either signing up for a payroll processor company, creating payroll processor records of your own, and then probably even having bank statements that back that up, just going the extra mile. Because, for example, if it makes your life easier in June, if you're collecting it now, it might be worth the effort. So I guess the best guidance there as of today is just to put in work to make sure that forgiveness is an easy process, and to provide all the documentation necessary, and just to take the steps to go above and beyond when necessary.
Thank you, Kevin. I appreciate it. So we'll go ahead and move forward here. I think I went all the way back to the beginning. Okay. All right, so what type of documentation will be required for forgiveness? So, like Kevin said, it's really going to vary. He did mention that there would be a variation for the type of business in regards to how you're incorporated or how the organization is structured. So, this would vary, again, like he said, for sole proprietorships, LLCs, etc. Knowing that we always want to try our best to go above and beyond with the type of documentation we are collecting in order to ensure forgiveness. I do want to share with you the language the SBA has, but please take this with a grain of salt, as it may be subject to change, as we've seen in the past. So, what type of documentation will be required for forgiveness? Answer: at this current time, the borrower's request for loan forgiveness must include the following: documentation verifying the number of full-time equivalent employees on payroll and pay rates for the required periods, including payroll tax filings reported to the IRS and state income, payroll and unemployment insurance filings. Documentation including canceled checks, payments, receipts, transcripts of accounts, and other documents verifying payment on covered mortgage obligations, payments on covered lease obligations, and covered utility payments. Payments on covered mortgage obligations, payments on covered rent obligations, or covered utility obligations. There's a little repeat there. And finally, any other documentation the SBA determines necessary. So that's the catch-all, right? Because that moment of determination, like we said, can come at the SBA's discretion. What I do want to point out is that some of these required documents for loan forgiveness might not apply to you. And all of these come with their own restrictions, right? For example, we know the utility payments cannot supersede 25% of the overall loan funds, right? So what we want to do is we want to reference this list, but we don't want to hold this list as the only guidance that's been issued. Kevin, do you have anything to add on that?
No, and I think for anyone wondering what specific documents you are going to need, we will cover that before too long here.
Correct. And at this period of time, that concludes my portion of the training. Unless, Kevin, there's anything you need me to go over. I did share those PDFs in the chat, and please feel free to download them and use them for your own purposes, and use them as a reference, and get back to us if you have any questions.
And so now we're going to transition for a moment. This is a little tool that we created internally here, as we recognize that loan forgiveness is fairly complicated. I mentioned it's been part of my role at the organization to try and stay up on this, and it's a lot of reading, especially as you realize that this is a fluid program in some ways, and things are shifting slightly where, for example, we've received new guidance as of 2 days ago on what you need to do to justify your full-time equivalency. So we created a paycheck protection program forgiveness calculator. And so I'm just going to run you through how this works and show you a couple examples. Everyone will be provided a copy of this later. And so the idea is that this is going to be a tool for your specific business to use to track your own forgiveness process and see where you're at, both with real-time information and then with a little bit down the road. So it is an Excel sheet. I'm going to see if we can get it exported to different formats with time. Hopefully you have access to a computer that has Excel on it. We have not had the ability to move this online. If there are any technology barriers and you need assistance from a loan officer, let us know. And we are going to be working to make sure that we're going above and beyond to provide the right assistance for people. So run you through how this works. So let's say we have Gerardo and Kevin's company, just the names of the two people that are here. We'll make this a little bit better. We're going to put Gerardo and Kevin's fund company. You get to an option here. It says business type. Different businesses have different qualifications for forgiveness. And so, for example, A multi-member LLC that does not file a Schedule C return, or a corporation, for example, have different forgiveness standards than a single member LLC or a sole proprietor. So I'm going to run through what a couple of those look like. Let's start with a sole proprietor or single member LLC. So you'll notice that this is going to block some boxes out. I'd give myself a C+ at Excel, and so this is the best way I know how to do this stuff. But if you go to an LLC, it shifts around the information that's available. So you'd put in your business name, you'd mark what type you are. Let's just say we're an LLC. You're going to start entering all these orange boxes are boxes that are indicating that it wants you to enter information there. These green ones, you don't have the ability to enter information in there. So let's say Gerardo and Kevin's fund company had a monthly payroll of $10,000. And so our PPP loan amount that we're qualified for, this is the amount that actually ended up in your account. You're going to enter that there. The date of dispersal, this has been a common question about, okay, when does my money need to be spent by? And so let's say Gerardo and I, today's Cinco de Mayo, May 5th. So let's say 05/05/2020. What it's going to do is give you a date that funds need to be allocated by. That's going to automatically show you what that 8-week window looks like and when you need to have your funds allocated by. So for the question earlier, when you go to your bank statements, you'll look at simply when did the deposit from DreamSpring arrive in your account. You'll enter that date here, and then it'll populate the day 8 weeks from that at which the SBA is going to want you to have funds allocated. One important question I've been getting from people is, okay, what happens for expenses that occur just outside of this? So for example, in this instance, this is showing up as June 30th. What if your next payroll processes on July 1st? It becomes kind of a problematic here, because if you're processing on the 1st of the month, it's currently May 5th, you'd only have one payroll time in there. And that becomes problematic to say the least. This is another area that we're still waiting on some clarification from the SBA. My new strategy, we cover 5 states, and I'll typically just reach out to SBA program directors from each of those 5 states and ask them the same question and see what the answer becomes. This question of, okay, do you care about when funding actually leaves the business bank account of the affected business, or do you care about when workers actually work? So for example, you could easily say, okay, we're paying our employees for May 5th through June 30th, but the money doesn't actually leave your accounts until after that. And we've heard mixed answers. My best guess and understanding is that it matters that employees are being compensated for hours spent working during those times. We will provide good clarification there as soon as we have it. And I think ideally you try and make your payroll match what's correct from the SBA's perspective. So within this, moving along, so Kevin Gerardo's fund company, we have until June 30th to document expenses. When you get down here, you'll start to see that all these boxes are green. There's an extra tab here where you can start to document your payroll. So let's say that on 05/07/2020, we have a payroll that goes out of $5,000. There's a little box here that says documentation. We'll talk about that in a minute. What that's going to do is that's going to flow over to the other sheet here and keep track. And so it's going to start to say, okay, current money eligible for forgiveness, minimum amount additional to be spent on payroll, and we'll talk about that in a moment. Loan balance if no further money is spent, showing that, okay, you started at 25,000, you are now down at 20,000 if you don't spend anything else over those coming weeks. And total money needing to be allocated is what you essentially have to spend in order to assure that the entire loan balance is forgiven. Going back to expense input here, the documentation side of things is very important. So what we really want to see here is that the way I would personally probably do this, being someone that likes technology, is I would take a Google document and create a link for it, and I just copy and paste the link in here. And that's going to be my tracking mechanism. So I know, okay, my payroll processor record from 5/7, there's my actual document, so I can click on that and get to it. The amount's $5,000. And ideally, you can go through and add on other expenses. So when you come across your May utilities, let's say that's 05/15/2020, you put your link in here, your amount $73.82, you put that in there. That will flow back across to forgiveness tracking and apply the utility payments column there. current expenses eligible for forgiveness will begin to increase there. So that's how that's supposed to work. Up here, you get some different information. It says minimum amount to be applied towards payroll, maximum amount of loan value for other qualifying expenses. So when you break this down, the SBA has dictated that a minimum of 75% of the loan value needs to be applied towards payroll. You cannot apply less than that if you want it all to be forgiven. If you applied, let's say 65%, you would end up with a balance at the end. You notice that says minimum though, so theoretically, you could spend up to the entire $25,000 balance on payroll. So for many businesses, given that DreamSpring is often working with newer businesses, your payroll is maybe increased since 2019. In that instance, that makes your forgiveness really easy, where if your forgiveness is, your monthly payroll is now $14,000, for example, all you're gonna have to do is come back here, and just to make this easy, I'm just gonna put in 28,000, even though we'd want you to break it down, just to show you how that works. That'll go across, $28,000 payroll expenses, current money eligible for forgiveness, minimum additional to spend on payroll, money still available for qualifying expenses, but total money needing to be allocated becomes zero. So essentially, if you're able to do that, if you can show $28,000 of payroll expenses, loan balance, if no further money is spent, is $0. You've done your job. And that's the goal for everyone, is just to get this column to be down at 0. Going back here and deleting some of this just to make my work a little bit clearer. When we're here, it's going to give you the maximum value for other qualifying expenses. So the SBA has dictated that there are other qualifying expenses, which we're outlining here below, that you can spend the loan funds on. You're saying, though, it's a maximum loan value for other qualifying expenses. So what this is going to do, you have a total of $62.50 to spend on the categories of business rent expenses, interest-only mortgage payments, interest-only debt payments, and utility payments. And so theoretically, I can spend up to $62.50. I can spend less than that if I don't have it to show. Then I'd probably just need to increase my payroll amount a little bit or make sure that all fits properly together. But you can only spend the max of that. So let's say, for example, right now, your money still available for qualifying expenses down there shows you, okay, between utilities and stuff like that. If I come back to business rent expenses, let's say my amount there is $7,000 I try and put in. What it's going to do is it's going to max out the money still available for qualifying expenses. And it's going to say you only have $62.50 that's eligible for forgiveness because you've reached your maximum there. At that point, let's say I've got some utilities, so I try and add another $100 there. What you're going to notice is that's actually no longer changing your money eligible for forgiveness because you've already maxed out that category. You have more you need to spend on payroll. So that's why this is a maximum loan amount. That's 25%. So for example, if this went up to $30,000, you can see that number jumps a little bit there. Within this, the idea is that, okay, as you go through, you can track your expenses, you can see where you're at, you can see where your balances are at, and seeing what's available here. Going down, I'm going to talk about Schedule Cs for single member LLCs and sole props in a moment because I understand that's different. There's another category here that is money received as an idle advance. To make my math here a little bit easier, I'm going to go ahead and put in $28,000 there just to show you how this works. The SBA has issued guidance that many of our clients have applied for EIDL, so the Economic Impact Disaster Loan Program. There's that nice little box you could check at the end that said, would you like to be considered for an advance of up to $10,000? What they've since released is that they're calculating that $1,000 per employee, and that's the amount that you'll be advanced there. That advance is actually going to count against your PPP forgiveness, is what we've recently learned. And so how this works, let's say this business has 3 employees, they qualified for $3,000. What it's going to do is it's going to knock that off your current expenses eligible for forgiveness. So it's going to show you that, okay, because of what happened with EIDL, because you got that advance, which is probably nice still, you only have $25,000 eligible for forgiveness because I've updated this to 30. And so this is now showing you that, okay, if no further money is spent, you have a $5,000 balance. If you go over to rent expenses, let's say you actually did have $6,000 of business rent, it's $3,000 a month. You'll show that, okay, you're back up at $31,000 eligible for forgiveness. Loan balance, if no further money is spent, is actually down at 0 again. So that's great. That's where you want to get to. So the EIDL advance, if you've received that, it essentially just means that you're going to need to have additional qualifying expenses in order to make sure that your loan balance does go down to zero eventually. This is something where FTE equivalency checks, this is an area that I think the SBA has the least amount of good information they've put out. We do know a few things. So they're wondering, okay, what were your full-time equivalency employees as of February 15th, 2020? And so that's part of why we corrected FTE information from all of you at closing. So let's say hypothetically you had 10 employees. One of the checks is how many employees do you have come June 30th? And so let's say you had 10 employees still, 10 FTE, full-time equivalency employees. Your essentially percentage reduction of loan forgiveness is 0. The whole thing's still forgiven. If that goes down to 9, if you decrease your employee headcount, then you have a 10% reduction of loan forgiveness. So this is new guidance from the SBA, but essentially your loan forgiveness will drop slightly there if your employees don't come back. And as a result of that, your cost of employee reduction looks like it's going to be about $3,100. When we have better guidance from the SBA, we're going to make sure this is as clear as possible. This is something where I've seen conflicting sources. This is our current best understanding. You got to retain your employees by June 30th. What's going to happen here as well is that when you have the ability, so the guidance they issued a few days ago, sorry to jump on this, but employees that declined offers are not included in this count. So let's say a lot of businesses have expressed to us, hey, we had to let people go already. Our headcount is down. So theoretically, let's say you were down at 7 people and you might be thinking, oh gosh, I'm going to lose a lot of potential money for forgiveness here. This is going to be really problematic. What you're going to need to do is you have to provide proof that you extended an offer. So for example, if you email your employee and say, hey, we're back up and running, I'd love to have you come back to work. And we've heard from some people, for example, the worry that, okay, maybe the employee is just going to want to claim unemployment or they're not going to want to come back. All you have to do is show that you made the offer. So if you had 3 employees you made offers to that didn't want to come back, those employees actually wouldn't be counted. So we'd look at that as 10 again. I think I'll need to change the wording on that. But essentially, you get the point that those will not be counted against you, which is nice. The hard thing is, yeah, go for it.
Oh, I'm sorry. Go ahead.
No, that's perfect.
Just to clarify, the language I think is important. Proof that proof that the position was offered, correct? That does not mean that employee has to respond to that email. There doesn't need to be any documentation that the employer ever heard back.
Exactly. So what you don't want to do in June, you don't want to be saying, okay, Gerardo, I called the employee and I don't have anything written, but I did tell them they could have their job back. You want to have something in writing. I would encourage you to have that be an email. A screenshot of a text might suffice, but maybe just go above and beyond. And another important question I've gotten from people regularly is, okay, if I had 10 employees February 15th, do I need to have the same 10 employees? And the answer to that is no. And you just need to have the same full-time equivalency by June 30th. And so if, for example, it takes you a little while, it's May 5th right now, you need to hire some new people, I just keep good documentation that you offered people their position back, that you try to keep them on board. And that realizing that'll make it so you don't reduce your forgiveness, but also you can try and hire other people, because one thing to think about, if you used to have 10 employees and you qualified for $30,000, it's harder to spend those payroll dollars if you don't still have 10 employees, right? If you're operating with a lower, smaller crew. And so it's possible you can hire new people. Gerardo, anything else to add to that? Or?
Yes, I think we should touch on bonuses. I have had a lot of questions about bonuses. A lot of employers are wanting to reward their staff for coming back, or maybe they were scheduled to receive a bonus this year and they don't want to withhold that bonus from the employee because it was already scheduled to take place. It just so happens that that bonus is now having to be administered during a national pandemic.
Yeah, so bonuses are eligible. the good check for everyone to kind of think about is, okay, will there be taxes applied to this money for the employee? So for example, is it considered taxable income? So what I would not do is, for example, give every employee $100 just as a thank you. However, if you do have payroll processor records or some way of showing that, yes, there was income tax applied to this, essentially that's the government's check for is it income. So bonuses are eligible. One thing to think about for people is that you want to make sure that, okay, you're not just, if you had 10 employees and only 7 would come back, and you're like, okay, I'll just give everyone a bonus for that extra amount. You're going to want to make sure that your FTE still looks okay, and that for any employees that didn't come back, that you have the ability to prove that you've made them an offer at least. Gerardo, anything else to add there?
No, I think that covers those most frequent questions. I do see we have a question in the chat. I wasn't sure if we wanted to address those now.
So from Barbara, yeah, I'll cover that one now. I'm trying to hold off on most of these, and I'm sorry for everyone for delaying that. But if you got idle money, essentially, that can count against your forgiveness amount. So it essentially becomes, if you were going to have, watch if I delete this here, you'll see that number bumps to 34,000. So it's saying you've shown $34,000 of eligible expenses. If I have $1,000 of idle, it's going to show that only 33,000. So it's counting against that. Our current understanding is that if you show enough eligible expenses to show that, yeah, we spent this money. So for example, let's say this company only had $30,000 in PPP, but their payroll was up a lot. So they were actually at $40,000 for their payroll for those timelines, and they had that all together. Even if they had a $10,000 idle advance, it's still going to zero everything out, right? They just care that at the end of the day, this payroll money, they want that making its way to your employees. And so that's what we talked about. This is a program for small businesses, but one of the primary goals is supporting the workforce, making sure that people are employed, unemployment doesn't keep skyrocketing like it has been, and that people have enough money to pay their bills. And so really, this money there, they want 75% of the $30,000 to make it to roughly the same number of employees you had before. If you make offers, they don't come back, that changes the situation a little bit. So within that, the idle money, it can all still be forgiven, and doesn't mean if you received idle that you're going to absolutely end up with a balance at the end. It just means that, for example, in some instances, you might end up with a balance if here, let's say you only had $15,000 of payroll costs you could show, and rent was there, and this was $100, and all those things kind of add up. You could end up with a loan balance, and this one looks substantial because they put in a pretty small number for payroll there that they probably wouldn't qualify for that much. One good thing for people to realize as well, if theoretically, what I've heard of some people doing, I think it's kind of clever, and not everyone needs to go this far, is that they've literally just set aside their PPP money altogether, and they've said, okay, I received $30,000. I'm only going to spend this on things I know are eligible for forgiveness. And so this person, for example, would get to June 30th and say, okay, shoot, I've only spent a bit of money. I actually have I should make that 0 just to make this easier, but I'm going to have a balance here, but ideally this money is just set aside. What I would probably personally do is just say, okay, hey, DreamSpring, that's my money that's not forgivable. This money either becomes a loan with us, so it either become an 18-month long 1% interest rate loan. Your payments on this would begin in December of 2020. So it's a way out. There's a 6-month deferral, so it's nice because you don't just suddenly have a payment in July. You got some time to figure it out. What I would probably personally do is just pay that off. If I'd set aside the money, if I didn't spend on eligible expenses, it probably stands to reason it should still be in my account. So I'm not really that interested in taking on additional debt right now. So shoot, I'll just pay it off. Not a big deal. So that's one thing I have seen people do. You also can take it as an 18-month long-term 1% interest rate loan, which 1% interest rate loans for business is pretty incredible if you think about it. But the problem for some people becomes that 18-month term is fairly short, actually. That you're going to still have some substantial payments, and I encourage you to be cautious about this, just asking, okay, does this fit in my cash flow? But If of the $30,000 you've received, you only spend on eligible expenses, you should have $8,900 left over at the end. What you do with that, whether you take it on as a loan going forward or you pay it back and you don't have any debt, that's up to you. Really quickly, and I know we're going to get to questions soon, I'm going to switch over and show you how the sole proprietor single member LLC looks different. So you'll see a lot of boxes just shifted there. In this instance, what this is doing, I'm going to change this amount just to make things easier. Let's see, what's a good number for me to use there? Let's just say $15,000. As a sole proprietor, my boxes have changed. Sole proprietors, you actually don't need to be tracking payroll expenses, not in the same way. So if you do not have employees, if you're just essentially, whatever comes into the account is yours, you're going to have an amount down here that is a wages, let's see, where is it? Current money eligible for forgiveness. Yeah, okay, so we got to add this box up here, that's it. So as a sole proprietor, your Schedule C income, you're going to look at what your line, it would be your line, what is that? Okay, let's put this at $10,000 and it's your line 31. So it's your net income is line 31 of your Schedule C tax return. In this instance, for this sole proprietor, if you had a line 31 of $48,000, I gotta unprotect that really quick. This is where I gotta make corrections before I send this out to people. You would have a Schedule C income of $48,000, which would qualify you for a $10,000 PPP loan, just knowing how those numbers work. So you'd enter that. At that point, you would already have sole proprietor wages included in forgiveness in the nature of $7,384.62. That's because the SBA, per their guidance, is forgiving 8/52 of your net income for your Schedule C. So that's why we're making this so it does the math for you. So you're entering your information just to run through this. $10,000 PPP loan amount, $48,000 Schedule C income, business expenses claimed on Schedule C. I'll come back to that in a moment. But this is showing you that because of this, I'm going to get rid of that rent expense. That probably is a little bit high for sole prop. Because of this, you already are automatically going to have $7,384.62 eligible for forgiveness. A sole proprietor, anyone filing with a Schedule C, is able to give payroll amounts if you have employees. So for example, if you're an owner and you have 2 employees, but you happen to file a Schedule C, which would mean that you have wages listed on box 26 and a net income listed on box 31, you would be able to list the wage income here as payroll. If it's just you, this is your set amount of wage forgiveness. Additional money needing to be allocated is still at $26,1538. One of the big differences for sole proprietors and single member LLCs is that only expenses claimed in the Schedule C can be claimed as forgivable in forgiveness tracking section below. So what that means essentially is that if you had a rent expense that showed on your Schedule C tax return that was reported as an expense in 2019, then that is something that's eligible for forgiveness. So as a result of that, let's say as a sole proprietor, you are having $1,000 a month for your rent expense and you're paying some utilities, that's $102. You'll add those expenses there and it'll start to decrease this number there. So you're going to start to see that you have kind of this interplay that's going on here. But as a sole prop, these expenses here, if you did not have a business rent expense that you claimed in 2019, you cannot turn around and claim one in 2020. Interest-only debt payments are eligible. So for example, if you have a DreamSpring loan, we probably already have you in interest-only payments. You should be if you're not. If you're having problems, we're happy to do that for you. Interest-only mortgage payments, utility payments. But essentially within all these, we'll be sending this out once I make the few kind of corrections and tweaks we need. The goal would be to have this getting down towards that $0 number, where we really don't want you to be ending up with a balance. And so pivoting to the questions that we have over here. So Brandon asked if at 8/52 of net income. Yes, that's correct. And that's what this is going to calculate here. So for A sole prop, if you want to look at it, you'll do 8 divided by 52 times your line 31. And that's going to show you what will automatically be included in forgiveness, because they realize that for a sole proprietor, how do you really track your wages if it's just kind of owner draws that are coming in almost, where it just goes from your business account to your personal, or maybe they're the same thing? It just gets complicated. Someone was asking if we can pay a 1099 employee. Unfortunately, 1099 employees are independent contractors. And so how the SBA would view that essentially is that that person needs to apply as an individual. And so any money paid to independent contractors is not an eligible use of funding. So that's why when we did your calculation, we were removing all money paid to 1099 employees there. Within this, Barbara's saying she couldn't get the PDF link opened up there. We will get that sent out later. We're going to send out a packet to everyone who participated today that's going to include both a polished up version of this forgiveness calculator that you can hopefully use as a good tool, but also also the PDFs that Gerardo had. So within that, let's open it up. If you have other questions, feel free to put those in the chat box there, and Gerardo and myself will do the best to answer them that we're able.
Should we go start at the top, or do we already answer most of them here? Let's see here. Is initial disbursement from the day you accept via email, or day funds actually clear your account? So the day that your funds actually clear the account is the date of initial disbursement. Let me see here. So you want to get the next one, Kevin?
Yeah. There's a question saying, regarding Schedule C for single member LLC, what proof used to show this payment is made to the member? Essentially, the idea is that, okay, if you're a single member LLC, there's one member. Line 31 is showing your net income. I would probably have a bank statement. For example, if you have multiple bank accounts, you have a business bank account and you're just doing a transfer, I would probably move that money around and just provide documentation. But as I mentioned before, filing with a single member LLC with a Schedule C is actually much easier on the forgiveness side. It does cap out at like 74% there essentially. So that's the only limitation, but let's see.
There's a question here. Home-based office here. Do eligible forgivable funds cover us on taxes? I claim a percentage of space per month. So would that also equate to this loan?
That's a good question. And that's an area that I think we'll probably see better clarification from the SBA in coming weeks. What I want to see from them is explicit guidance around how to handle those. And right now I'd be guessing. I would say that my hunch there is how it depends on if you, for example, if you are a single member LLC and you have that on your, if you have utilities listed on your Schedule C tax return, you come back and provide documentation of utilities being paid that lines up with the address of the business, that sounds acceptable. I would guess, and this is my hunch, is that that would be appropriate. However, like I said, I'm hedging on that because I do want to see written guidance from the SBA.
This is a common one here. Regarding Schedule C for single member LLC, what proof is used to show payment is made to the member? And there is no clear verification on that one, correct, Kevin, other than
it should be essentially when you applied, you've given us your Schedule C return. That's going to be the documentation we'll really take to the SBA. Having it documentation that that money actually went to you is maybe a good step, but it appears that actually probably will not be necessary. That's an instance where maybe having that bank statement, like I said, if you had multiple accounts and you move money around, that might be the way to go.
The accounts will suffice, and the reason we asked for the Schedule C on the front end was to cover you during forgiveness.
Exactly.
I think we covered Barbara's question. We covered the 1099. Did you say 852 of net income? Thank you.
Yeah, I think we've got everything above this. It looks like I've got a Jay White to everyone. What's your take on accrued expenses since we run accrual basis, not a cash basis? That's a good one. Gerardo, is that anything you might happen to know there at all, or?
Um, no, I actually, that is a good question. That's a good question.
I am so
We can email you
like I mentioned
directly.
on this earlier, that's an area where I really functionally believe that it ought to be accrued expenses, given that you're not choosing the date you want the money to arrive and the 8-week window arbitrarily happens to start after that. I think it should be on the basis of accrued expenses. Like I mentioned, that was one question we'd sent out to our SBA representatives. 3 out of 5 people said it would be based on accrued. One person said actual payments being made. One person did not respond to us. So that's not something that I'm going to take as fact at this point until we see it. If you're in that instance, what I might advise actually is do your best to try and make your payroll, for example, match the actual 8-week timeline, where if you have to adjust your pay cycle slightly, that might be worthwhile. And then Russ is asking, we have to prepay payroll taxes on these loans, correct?
They
I
were,
don't.
so
Go for
payroll
it.
taxes should have been included uh, in the loan amount, correct? And therefore they would be forgiven.
In some instances, they were. It's not my knowledge. I've not heard at least that you're gonna have to make prepayments on the payroll taxes. And my understanding is that the loan dollars should be essentially, it's not received as income for the business at all. And so you would have normal payroll taxes associated with whatever wages your employees are, your normal employer contributions would still be there. However, within that, I've not heard anything about a necessity to prepay. Then on-site radiology, my business received funds from CARES Act, being billed, being that bill Medicare and Medicaid. So received funds from the CARES Act. So the CARES Act encompasses both the Paycheck Protection Program and EIDL. I'm guessing that that might be included within the EIDL, is the Economic Impact Disaster Loan. If it's a grant, if it's part of the EIDL advance, then it would count against forgiveness. However, if it's separate from that, if it's an EIDL loan, then it operates in its own world. Can workspace or office workspace / rent be prepaid? I would say you cannot pay for anything outside that 8-week timeline. So for example, I wouldn't turn around and pay your July bill with that. That's going to cause problems. Depending, let's say theoretically that you had a disbursement in mid-April and you were going to have May 1st and June 1st payments for whatever your space is, I would just make those payments and count those. Essentially, the idea that 2 payments is probably what they're running for. I provide documentation of those. Trying to say, oh, I'm going to pay for July ahead of time, that's going to be putting it outside of that window. From the SBA, they're wanting to make sure that expenses that are being paid for are kind of covering roughly an 8-week timeline. So the idea is 8 weeks of employee wages and a little bit left over for some of those general business expenses. So Jeff White again about the payments and the payroll taxes. I don't think that those are going to have to be prepaid. I will follow up with about that again, or Jay White. I'm not sure if it's Jeff or not. I know a Jeff White is a friend. Sorry, I made that assumption there. So within that, I don't think that you're required to prepay. If you're able to is a different question. If you could show that being set aside. Per Brandon, rent expenses calculated based on what the rent expense from Schedule C. My current understanding there would be you need to show a rent expense being counted in 2019. So if there was any rent expense listed there, come 2020, you're able to claim it. What you cannot do, and one thing that's important for people is, let's say you didn't have an office space and they're always looking at like February 15th. If you look at this and say, hey, I've got money left over for paycheck protection, I'm going to go ahead and go get a lease for a office space for us, they are not going to consider that an eligible expense. They want to see that it was current as of February 15th for a single member LLC, that it did exist last year, but then you just provide your actual receipts of the transactions.
Yeah, no expansion is really the language they use. Just no expansion, whatever that looks like. Sorry, Kevin, did I?
No, that's fine. And so the piece I would say, as we're kind of winding down here, we've got about a minute left. Be diligent with your record keeping. Ideally, this is something where when expenses come in, you save the receipt and whatever your methodology is for that. Everyone's got their own systems. And ideally, when it comes time to apply for forgiveness, it's very simple. You want to be tracking this, just kind of generally seeing where things are at. And we're hopeful that maybe half you guys will use that forgiveness tracker as maybe a useful tool. But essentially, you want to be keeping good records of where you're at. Then let's see. Essentially, there will be updates there to come out. Within this, the SBA has given us, from my perspective, probably 70 to 80% of the answers I really want. Their only written guidance on forgiveness came out on April 3rd, and I've heard stated things since that. But really, we do need more concrete answers. So recognize that as much as there are questions on behalf of business owners, we are also trying to work through those as well. FTE calculation is a question again from Jay White. It says you have 27 employees, laid them all off, and 25 came back. 2 did not due to concerns about COVID exposure. If you offer them jobs back, they did not. You said they did not count into your FTE count 8 weeks down the road. How do you account for that? So what you would need to do at closing, we collected from you essentially a count of your employees. For many people, it's simply just a list of names. What you would do at that point is send us a new list of your employees showing 25 are currently employed. Then you would say 2 are not, and you would provide the written documentation that we talked about showing that, okay, on May 27th, I emailed this person and said, hey, I've called you a few times. Want to make sure that you were aware that you do have a job offer that's outstanding. I would love to have you return to work by this date on June 1st at your previous compensation rate. And so really trying to clearly outline that, and that's the documentation you would need to provide there. Within that, one other important note, one question we've heard regularly from employers in some situations is saying, okay, my employee is actually on unemployment. They just don't want to come back to work right now because they're afraid of coronavirus exposure. That is a hard proposition. And one thing that's important for everyone to be aware of is that the moment you've offered them their job back, they're no longer eligible for unemployment. So their unemployment payment that's coming in is essentially dependent on them not having an employment offer. And so keep that in the back of your mind. We understand that's a difficult proposition to get into, and you don't want to be arguing with your employees about this, but their eligibility for unemployment is based on the fact that they don't have employment offer. The moment you've offered for them to come back, they are no longer eligible for unemployment. So keep that dynamic in mind. It's a good time to be kind to each other in general and to not get into arguments when possible, but that is the way the law would be written. We're about 2 minutes over. I'm going to encourage everyone. We probably answered hopefully 90% of the questions today. We are going to be following up with more information, and we want to make sure that we're providing great technical assistance during this time. DreamSpring as an organization, we've really looked at this and said, okay, what can we offer during this time compared to a large bank or financial institution, and providing good technical assistance, answers to questions when you need them, and recognizing that, okay, right now we might not have all of them, but we want to make sure that we provide support to all of our clients, all of our new clients, all our existing clients during this time. So if you need things, feel free to reach out. The next couple of days, we are going to be fairly busy with funding the next round of PPP loans. So if you get a delay, it's not that we don't care. It's not that we're not trying to get back to you. It's just that our call volume is about 5 or 6 times what it typically is at the main office, and email volume is very high as well. And so there's just a slight delay, but we're expecting that to abate as we get into May and the next round of PPP funding starts to wind down. But for now, hopefully that's a good starting point. You can watch for the email that'll come out later today or tomorrow morning with that PPP forgiveness calculator, and also with Gerardo's FAQ questions. Thank you so much to everyone who joined today. Hope you're safe and doing well, and we hope that the coming months and weeks bring new hope and joy for you and your business. Thank you so much.
Thank you, Kevin. That was very eloquently put. I have nothing else to add. If you have our contact information, please feel free to reach out, and we will be in contact as soon as possible.
All right. Thank you, everyone. Have a great afternoon.
Bye.